Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching our afternoon coverage today on Easynomics. Welcome once again. The Monetary Policy Committee of the Reserve Bank of India is holding its first meeting for 2024 and also the first meeting after the presentation of the interim budget for 2024-25 and to discuss what the RBI is likely to do on interest rates and what will be the outcome of the three-day meeting. I'm joined by Indranil Pan, the Chief Economist at Yes Bank. We also have with us Sunil Sinha, Director and Principal Economist at India Ratings. Thank you very much for joining us. As we start the debate, I want to bring up for you viewers the expectations that we have from the Informist poll. And as far as the repo rate is concerned, every single entity that has been polled, and those details are available now with you, all the respondents have said a status quo. As far as the stance is concerned, a vast majority of all the respondents say withdrawal of accommodation, with just 2 saying it will be neutral. So I want to come to Indranil on that big picture. Indranil, what's your own expectation as far as the rate is concerned, and what do you expect as far as the stance is concerned?
For this meeting, and to keep it very short, we are not really expecting any change either ways, even on the stance as well as on the rates. I think the critical direction in which this policy is likely to move, and probably that's the expectation of the market, is in terms of the liquidity and the guidance that the Reserve Bank of India gives in terms of how liquidity needs to be managed, or what is the level they are looking at in terms of the liquidity negativity that they are expecting or they are likely to be happy with.
Sunil, that very same question to you.
Yes, same. Siddharth, even we are not expecting any change either in the policy rate or the stance. However, as we all know, that liquidity has been an issue for now almost more than a quarter. And in between, the liquidity deficit had even gone up till 3 trillion Indian rupees. I guess currently it is down to close to about 1 lakh trillion. So RBI has been taking measures, and I believe that as the government spending continues in the third quarter, some of these liquidity shortage that we are witnessing right now will automatically be taken care of. And if required, RBI will continue to intervene in the market to manage the liquidity. Although some views have emerged whereby because of the liquidity deficit, some people started articulating that managing it with a stance of withdrawal of accommodation may be not in sync. But my understanding is that that can go so long as RBI believes that inflation continues to be something which needs to be managed through the policy rate.
Indranil, on the overall reading that the MPC members are likely to have of the interim budget and post the budget numbers presentation, the entire finance ministry brass continued to stress that the numbers are unlikely to change in any material manner in July, going so far as to say that the appropriation is only for 1 quarter, the budget in July and the one that has been presented we shouldn't expect too much of a difference. Given that understanding, what broader signals will the MPC members draw from the borrowing plan and the overall fiscal consolidation roadmap that the budget has outlined?
So, number one, in terms of the fiscal consolidation, I think the direction is very clear. And somewhere within her budget speech, the Honorable Finance Minister also did indicate that she is likely to do even better than the promised 4.5% for the next year. To that extent, if the budget is on a contractionary mode, I think that's anyways a positive for the inflation trajectory in India. Now, having said that, I'm not sure whether the budget is one of the most important things that the RBI would be looking at. But even though we do not see any inflationary impetus out of the budget, I think the bigger concern and worry for the RBI, or rather they would still want to maintain a hawkeye on, is the food price dynamics. The core has been managed, the core is on the lower side, but we are once again gradually going into the June-July period where we remember the shocks of the tomato of the previous year. To a certain extent, we are all possibly assuming, including the RBI, that the year is a normal year in terms of the rainfall and tomato crops are good, and that's the reason in Q2 you see all estimates either very close to the 4% or even below the 4%. But once again, if there's a tomato shock that was there in the previous financial year, I think that 4% will once again get called into question. So in essence, I think the fiscal is a reality in terms of being non-inflationary, but I think the RBI will have to look at a lot many things more in terms of how the inflation gets determined. And let us not forget that the fiscal also has done quite significantly in terms of absorbing some of the price shocks that have emanated out of the food side of the economy. By that I mean stopping of exports of rice and wheat, the export duty that was levied on onions. So all those measures are likely to be continued, and therefore the fiscal is also absorbing and helping the RBI in managing inflation and going forward.
Sunil, the stance has been very loosely linked to liquidity behavior. So if there were to be a change in stance to neutral, what are the likely justifications that the MPC could provide?
Look, as I said, I mean, liquidity has been an issue. And if you have to manage the liquidity into the system, and if the stance is changed from, withdrawal to a neutral, then in that sense, obviously, it gives a little more headroom to RBI in terms of whichever way they want to manage. I mean, at the neutral stance, either they want to inject liquidity or absorb liquidity, all of that is possible. But some people believe that with a stance of withdrawal, if you were to inject liquidity to really tide over the ongoing liquidity crisis, there is some bit of conflict in terms of stance and the operations. But as I said earlier, that ultimately what matters is whether this liquidity shortage that we are witnessing is frictional in nature or more structural in nature. I believe that RBI still believes that these are more frictional in nature. It started with festival season, and then subsequently it got prolonged because of advance payment and government probably not spending. As we also saw that, the revised estimates clearly indicated towards conservatism so far as government expenditure is concerned. Although on capex they have, but nevertheless, I mean, capex also has been reduced in the revised budget as compared to the the budget estimate. So all that meant that the amount of liquidity that would have come back into the system due to the government spending has not come. But the likelihood is that in the current quarter, which is the fourth quarter of the current fiscal, things might improve, or but nevertheless, we should also keep it in mind that towards the end of March, once again there will be a big outflow in terms of corporate tax and
Thanks.
so on and so forth. So net, it is a situation which RBI is watching very closely. But my understanding is that unless and until the MPC members believe that this is not frictional, more structural in nature, I guess the stance is unlikely to change.
Indranil, I want to switch gears to inflation once again and ask you that between the last MPC meeting and this one, has anything materially changed in terms of inflation that could lead to a different decision or a different take from the members of the MPC as far as inflation is concerned?
To me, I think if I look at both my projections and also the RBI's trajectory that they have provided for till the Q3, I don't think there would be much change in terms of the estimates of inflation from the RBI, which necessarily means that yes, we were expecting some amount of softening to happen. That has happened. As I did say, core has been on the lower side, and that's a good thing, despite the fact that growth has remained quite strong, which necessarily means that the economic system is still not besieged with excess demand, and that's a positive, and that's a good thing that the RBI would be noting. But having said that, I think the RBI and the MPC commentary last time was very clearly on the fact that the food may have actually become the more core inflation for the system at this point in time, and that's what they are watching out very clearly, given the changes to the climate, given the El Nino conditions in the world, and given poor sort of demand supply, or rather carrying stocks of the world has actually been on the lower side. And that should keep the global food prices as well as India food prices to a certain extent on a sideways trajectory. And once again, I think bringing back the whole concept of the tomato price tomato price surge that we saw last time, our models don't factor in as much of a surge as we saw the last year, but that's another factor to watch out for. So, to answer your question directly, I don't think the trajectory has changed much. Yes, it is softening, but whether we can soften all the way to 4% in a hurry is the critical question that we need to ask.
And that's a very good point. And on that point, Sunil, I'm coming to you with the question that most people will now ask. So far, it's very clear from what both of you experts have said and the other polls that we have, that there is absolutely no one who is expecting a change in the repo rate. It's been at 6.5% 6th time. Sunil, the question is that over the last 2 years, RBI has been focused a lot on targeting the formal inflation target. But it's also clear from various actions that the RBI is also looking at what the US Fed will do, and in some ways the action has been pegged to what is happening in the US as far as the US Fed action is concerned. Given that, when do you think the RBI will pivot on the rate?
Look, so far as the Fed's guidance to the market is concerned, it is quite clear that they are also not going to change their stance or the policy rate or reduce the policy rate very quickly or anytime soon. They are also in a wait and watch mode, and they want to observe how the inflation behaves. So far as RBI is concerned, we all can recall that in the past, there have been many instances where RBI's guidance with respect to inflation and the kind of policy stance and the policy rate RBI pursued were not in sync with each other. That despite guidance, the actual inflation turned out to be much higher, but still RBI was hesitant in terms of raising the policy rate, thinking that this is more frictional or cyclical or cyclical in nature, so it will correct itself. But as Indranil said, that food inflation has been a major issue so far as overall inflation in India is concerned. The core inflation is certainly is down close to 3% and thereabout. But the fact remains that the food inflation is largely a supply side phenomenon. Nevertheless, the fact remains that if food inflation remains high in the system, then very soon it translates into wage price spiral. And that can then become part and parcel of the core inflation as well. So clearly, I mean, in my view, till the time RBI believes that inflation has come under control on a sustainable basis. That means that if their target rate is 4%, then on a sustainable basis, the overall inflation remains in and around. Then only RBI will think in terms of tweaking the policy rate. As of now, as your screen was also showing, that RBI expects the overall inflation to come down to 4% in the second quarter of next fiscal, but then again it expects it to rise to 4.7% in the third quarter. So clearly, I mean, RBI is still not very comfortable with respect to the inflation trajectory. And so long as that trajectory remains uncertain and inflation remains above the target level, I doubt that RBI will be in a hurry to do anything with respect to the policy rate.
Indranil, is there any possibility that the Reserve Bank of India could sort of beat the Fed to a pivot?
Very frankly and honestly, I don't think so. Even though the RBI will consistently tell you that they do not follow any central bank and domestic conditions are more important. So if I take the domestic conditions into consideration, definitely the inflation remains of a very critical nature in terms of how the reaction function of the Reserve Bank of India pans out from here on. But having said that, I think the inflation or the interest rate gap between India and the US is relatively quite low, and to that extent they will possibly not want to precede the Federal Reserve simply because it might actually have some implications on the currency if they might be doing that. And I think that is something that the RBI would also need to avoid, given the way they have held the currency within a very tight range over the last few months. So again, I don't think the RBI would precede the Fed, and from that perspective, we are expecting Fed to move only in June. March is definitely not on for the Fed, given the very strong labor market data that we saw. We don't also believe that May would be a good place for a rate cut for the Fed. Even though overall inflation has tended to come down. But once again, the critical problem, as like any other central bank, is credibility of the target of 2% in the US. So that is something that we need to watch. So we are looking at a June, and therefore we are looking at an August for the Reserve Bank of India.
A final round of questions, and Sunil, because this is the first policy after the budget, and before that we have had GDP numbers, the NSO has forecast 7.3%, the statement on the economy and not the survey this time also gave a 7% outlook for the near future. Given that, do you see the possibility of a revision by the central bank as far as India's GDP growth is concerned?
Well, there can be, because last time also RBI had increased its GDP forecast for the current fiscal year to 7%, and now NSO is saying 7.3%. So there is not much of a difference, but that is possible. But the fact remains that irrespective of what the actual growth number will be for fiscal year 24, the growth momentum that is being witnessed in the economy at the current juncture would certainly be playing on the minds of the RBI Monetary Policy Committee. That look, I mean, see, inflation is an issue. Uh, Policy rate is on the higher side, and despite that, the economic momentum is continuing. If inflation has to be really fought on a sustained basis, then despite high policy rate, if the growth is panning out as per expectation or even better than expectation, then where is the need to really readjust the policy rate in a way that it starts supporting growth through higher credit offtake? And in fact, the credit offtake is also much better than anyone would have expected. So, all in all, I don't think that the current policy rate and current policy stance in RBI's view can be, I mean, RBI stance can be viewed as going against the growth process which is going on in the economy. And perhaps that is also one of the reasons why we have not seen anything coming from the Ministry of Finance to the RBI that they need to do something about policy rate because it is hampering growth. So if everything is so well, probably RBI will then focus on its nominal anchor, which is inflation, and which has surprised RBI a number of times in the past. So unless and until it believes that it has been controlled on a durable basis, close to 4%, they will continue with their current policy stance and the policy rate.
Indranil, final question on the show today, and the markets have kind of more or less factored in that this policy will be par for the course, no surprises expected there. What is the next macro event, if not the next policy meeting, that the broader markets and economy need to look out for as far as signals are concerned?
I think for me, the signals are more external than internal. We see China being on a weak sort of level and is being supported very significantly by policy in that economy. Now, there can be two outcomes that can play out. One, the soft landing that we are expecting, and if there is a soft landing, there would be relatively, even if the rate cut starts, say for example, June as we expect, we are expecting relatively a shallow rate cutting cycle in 2024. So that's one type of a scenario which I think the market has factored in and is moving ahead with that expectation. The other scenario, of course, is, and no event today is a zero probability event, is that of a sudden sharp landing and a significant downside in terms of the US economy, and also pulling the rest of the global sort of growth lower. In that case, we might actually expect a very significant sort of reversal in the policy rate, and then the market has to sort of factor that in. But I'm not sure whether rate cuts at that point in time will be supporting the market, because I think at that point in time, the risk of atmosphere will be more important, and there could be possibly a race back towards the safe haven demand for the dollar, which necessarily means that the emerging market currencies as well as the stock markets will have to take a bit of negative hit on that account.
Absolutely, and as far as the markets are concerned, from here on till pretty much June is a time where the focus will be on the broader politics and the political economy, and we'll keep track of this for you. Viewers, the MPC deliberations will be out tomorrow, and we'll be back analyzing what the MPC does and doesn't do. Indranil, Sunil, thank you very much for your time with us today. With that, it's a wrap on this show. We'll be back with more. Until then, goodbye.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now.
की बार पूरा देश कह रहा है, अब की बार खड़गे जी भी कह रहे हैं, लेकिन अध्यक्ष जी
An unofficial